Hola mi gente, welcome back to the channel. My name is Sean and this is We Are Investing. So there are a lot of people out there on YouTube right now telling you what to do when the market is crashing. And some of it I agree with, some of it I disagree with. On today's video, I'm going to tell you what I believe is the best thing to be doing right now while we see this turmoil in the stock market. The things that I disagree with is that you should not be looking at your portfolio. I strongly disagree with that. You should be looking at your portfolio. And now is the time that you should be analyzing stocks like never before. You should be doing a ton of due diligence. The reason being is you need to identify what your entry price target is for stocks that you wanted to get into. Your analysis has to be based off of fundamentals and financials. You have to come up with a fair price for a stock because many stocks are overvalued, trading at high multiples, and they are coming down and they're going to be way more attractive. And they could potentially be huge opportunities. We also have stocks that are legacy companies that are not going to be going away and also have a lot of growth potential that are falling. You need to identify the entry price. And you need to set an alert so that when it gets to that price, you are notified and you can execute into a position and open an investment in that company. So if you're not watching the stock market because it's too stressful right now, you don't like seeing the red and you're not doing the analysis, then you are going to miss out on the opportunities that arise. So that is the first thing that I strongly disagree with. You should be looking at the stock market, but you should not let it control your emotions. You should be looking at this as an opportunity to buy more shares and to make more money. And the thing that you should be doing is you should definitely be analyzing stocks right now because this is the time where most investors make money by getting in when stocks are trading at a discount. You should really be looking at stocks that are broken, but companies that are still strong, where the story is still strong moving forward, but the stock is behaving in a way that is not reflecting that. Do your due diligence, look at the financials, look at the fundamentals, be conservative in what you are estimating for growth or projecting revenue growth at, and then come up with a fair multiple or do a discounted cash flow valuation if the stock is suited for that type of valuation. The next thing people are saying is that you should be dollar cost averaging, and I agree with this, but it depends on what kind of investor you are. The next thing that you could and should be doing is using the options market to help hedge your positions. There are two ways you can be doing this. If you have a position already open and you own 100 shares or you have leaps that have high delta, you can be selling covered calls against those positions, either a traditional covered call or a poor man's covered call. Because we are in a market that is moving down, the chances that your covered calls are going to turn into the money are very slim, and it's a great hedge right now. In addition, sell covered calls at strike prices that are above your break even so that you're guaranteed to make money on the position, and only sell covered calls that are a couple weeks out, preferably weeklies. Another strategy you can do is you could be selling cash secured puts. When you do that due diligence and you analyze a company and you come up with your ideal price target, sell a cash secured put below that price target and make money weekly until the stock gets to the price that you're willing to buy the shares at. This is a great strategy right now because puts are selling at a premium because most people are bearish. Using the options market to make money while you wait for the stock to get to the price that you want it to be at is a great thing to be doing right now, and it actually helps hedge your position. Because before you even get into the position, you made money off of the stock. So the stock in theory can drop a little bit and you still would be positive on your position. One thing you should definitely not be doing is selling your investments, but you should be selling your trades. Your bullish trades probably should have already been sold. You should have had a stop loss set. You should have had your risk to reward profile set for that stock. Because when entering in a trade, if the stock is to fall, you should just cut your losses. Do not make a trade into an investment. So let's recap. What should you be doing right now? You should be analyzing stocks, a ton of stocks to get your entry price target. Once you identified your price target to enter into a position, you're going to set an alert so that you're notified. When you're notified, then you can enter into your position. You should be looking at your portfolio and you should be selling covered calls or cash secured puts depending on if you own the stock already. or if you want to be buying more of the stock at below a certain price. Both of those options trading strategies right now, I think, provide great benefit to the writers of the contracts. And the last thing is you should have cut your losses on trades that dipped and were not investments to start. That's my personal opinion. Now, if the stock market will fall some more, it's very likely that we could see another dip. Just because today we bounced back and we covered most of the losses from yesterday doesn't mean that this is over. So be conservative in the price targets that you set. Be patient and hold your long-term positions because eventually this is going to end. And this is part of being an investor. There are ups and downs and you got to ride through them all to actually make money in a position. Money just doesn't come right away. Instant gratification is actually not a good thing. You want stocks to fall when you buy into them so that you can buy more and actually build up a position that's going to be worthwhile for you and make a difference to your portfolio. Now, if you want a brokerage to analyze stocks, I highly recommend WEBULL. Through WEBULL, you can take a look at the charts, you can take a look at the financial statements, you can take a look at the fundamentals, you can take a look at the news, you can even see what analysts are saying about a stock and what retail investors are saying about a stock. It's one of the best brokerages out there in my personal opinion. There's a lot of value in WEBULL. And right now, they're currently running a promotion that will get you 2 free stocks worth up to $2,300. But you have to use the exclusive link that I am providing down below. But with all that being said, that wraps it up for this video. Hit that subscribe button, ring that bell, smash that like button, join our private Patreon, become part of our Discord server. Links are provided down below. I'll catch you all on the next video. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya!